Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
So, Professor, the Bank of Korea has decided to go with a 50 basis point rate hike, a big step as it's called. It's the first time they've raised rates 3 months in a row. What do you make of the BOK's decision?
Today, Bank of Korea raised this key interest rate by 0.5%, which is an unprecedented size rate hike in history. So Bank of Korea's key interest rate became 2.25%, and it is 0.5% higher than that of U.S. Fed. It was a preemptive bid to fight fast-growing inflation pressure pushed up by high energy and commodity prices. This marked the Bank of Korea's first big step rate hike ever, and the sixth rise in borrowing costs since August last year, when the central bank began rolling back its easy monetary policy put in place for about 2 years to bolster the pandemic-affected economy. Today's rate increase also came after Bank of Korea's back-to-back 0.25% point rate increase both in April and May, and represented the first time borrowing costs have been elevated for the third consecutive time. It is highly expected that Bank of Korea will raise its key interest rate up to 3% level in remaining 3 times of monetary policy meeting until the end of this year.
Well, stocks on Wall Street were lower again overnight. The declines led by energy, tech, health-related shares. The stocks futures are flat while investors wait to see what happens tomorrow with U.S. inflation data. What's the story in the global markets?
Fears about a recession on the horizon weighed on stocks, continuing a volatile stretch for global markets, including U.S. In yesterday's U.S. market, the S&P 500 fell for the third consecutive session, losing 0.9%. The Dow Jones Industrial Average declined 0.6%. The tech-heavy Nasdaq shed 0.9%. Losses accelerated, actually, in the final hours of trading session. In the U.S. market, many investors are waiting for fresh inflation data due on Wednesday. Major indexes, oil prices, and bond yields have fallen ahead of the CPI or price level data release. Market expectations is that June's U.S. inflation would be around 9% or near, which is another record-breaking inflation. Against U.S. markets move, all Asian markets moved slightly higher today. Nikkei 225 gained 0.5%. Shanghai index also advanced 0.1%, while Hong Kong's index marginally stayed almost flat.
Well, Korean stocks today were higher. The expectation had been for a so-called big step, and that's what the market got today, a bit of certainty. Carmakers among the winners, a rebound for Kakao as well. Tell us about the domestic market.
Today, domestic markets advanced, supported by Bank of Korea's key interest rate hike. Generally speaking, higher interest rate is a negative factor to equity markets. However, Bank of Korea's interest rate hike today is something highly expected for a long time. So market participants became satisfied with Bank of Korea's action today. The benchmark Kospi gained 0.5%, and Kosdaq also advanced 1.7% today. In Kospi market, domestic institutional investors net bought 356 billion won, and it became a major factor to drive up the market. Most of the large cap stocks gained today as the whole market expands. However, Samsung Electronics lost 0.2%, and the second largest cap, LG Energy Solution, also dropped 0.3%. However, other major cap stocks like SK Hynix, Hyundai Motor, Naver, LG Chemical all advanced today.
Well, Professor, the exchange rate yesterday got as high as about 13.15 against the U.S. dollar, not much lower today. The won's been depreciating a lot as investors try and move to the dollar. Some are saying the won is going to continue to weaken. A lot of factors here. What do you see driving the exchange rate?
These days, Korean won fell to the lowest level against U.S. dollar in nearly 13 years, as investors chase safer assets amid growing fears about a global recession. The won closed at 1,305 against the greenback, down 4-1 from previous session today. It marked the weakest closing since July 2009, when the won ended at around over 1,315 won per dollar. Market volatility has recently increased as demand for safer assets like U.S. dollars increased amid the Federal Reserve aggressive rate hikes and fears that such monetary tightening could precipitate a global recession. The 1,301 level has been regarded as a symbolic resistance level that has not been reached since the global financial crisis of 2008 period. Economic policymakers have recently said the won's weakness below the level is not seen as a sign of economic crisis, citing Korea's strong economic fundamentals. However, I have to say that the $1 exchange rate will be staying above 1,300 won per dollar level until the end of this year, as U.S. Fed's interest rate will be higher than that of the Korean base rate after FOMC meeting in the late July.
It does seem to be shaping out that way, Professor. See if any policymakers can do anything about it. Maybe the currency swap could be something we'll see soon. Well, we'll have to leave it there today. Professor, thanks so much for coming on and sharing your insights with us. We appreciate it.
Thank you very much.